Hello and welcome to another edition of CMS Forex News. My name is Mike Hetman and today is Monday, October 6th, 2008. European governments rushed to shore up their faltering banks as the credit crunch continued to wreak havoc on financial institutions. Over the weekend, top EU leaders failed to hammer out a coordinated approach to the crisis. Germany and Belgium guaranteed to back bank deposits, and there were further bailouts overnight. The individual actions taken by EU nations did not ease concerns, and stocks tumbled as a result. Stocks in Asia, Europe, and the US were sharply down as fears of a global slowdown intensified. The euro-yen pair was down as much as 800 pips from its gapped open as panic selling gripped the Forex markets. The yen was the big winner today as carry trade continued to falter. The Pan-European Stock 600 index was down nearly 8%, with banks and other financial institutions leading the downfall. It was the worst one-day sell-off ever. Mining firms also saw strong selling as investors backed away from commodities on fears of a global recession. The euro was lower against the dollar as well, falling below 1.35 for the first time since August of 2007. With the European heads of state unable to coordinate policy and being forced to bail out firms, investors are moving their assets to the relative safety of the dollar. Today's fall amounted to a 250-pip move and is the sixth session in a row that the euro has weakened against the greenback. After a fall in the Asian session, the pound-yen pair consolidated only to fall another 600 pips as the New York session began. In total, the pair fell more than 1,000 pips from its open near the 186 level to test the 174 level in New York trading. By 3 o'clock p.m. Eastern Standard Time, the Dow Jones Index plunged more than 700 points to break below the 10,000 mark for the first time in 4 years. The dollar-yen pair fell to test near the 100 level from its open near 105, a change of 500 pips. Oil prices fell below $90 a barrel as investors bet demand will be low in the coming economic environment. The decline in commodity and oil prices hurt the Australian, New Zealand, and Canadian dollars. The US dollar-Canadian dollar pair rose above 1.10 for the first time since May 2007 as the pair rallied 230 pips in New York trading. The Australian dollar fell to its lowest level against the greenback since April 2006. Though the markets are focused on risk and not fundamentals, there are key events coming up overnight. Mainly, the Reserve Bank of Australia is scheduled to cut rates overnight. The Bank of Japan finishes its meeting as well, though it is expected to hold. Overnight, we get manufacturing production and housing prices data from the UK. Tomorrow, both ECB President Trichet and Fed Chairman Bernanke are scheduled to give talks, and the U.S. releases its FOMC meeting minutes. And this completes Forex in the news for a rather interesting start of the week. For CMS Forex, I'm Mike Hetman. Have a good evening.